Welcome to Trading Lounge and the Bitcoin report for the 12th of May. Yesterday we were looking at Bitcoin being bearish and also bullish. We've been looking at both sides, and we're also looking at where and when can we move in, either long or short. So let's just continue on that conversation from yesterday. So on the bearish side here, we're looking at an A wave, a B wave, and a C wave down here. And on the bullish side, we're looking at the market like this here, with an A and a B and a C for wave 4 here, with up for wave 1 here. And we can look at we can even look at wave 2 over here, but it's a bit difficult to get 5 waves down in this particular structure here. I can only get 3 waves down, so it's either that or we look at it like this here as 1 here and 2 here, as we were looking at it yesterday on that low. And this is fine as long as that low stayed in place. So now we can look at this with that low there staying in place, so that needs to stay in place to be bullish. And we'll still have a look at the bearish and the bullish side on the intraday with this here. This particular spike in the market here, I think it just belongs to this particular platform here that hasn't cleaned its data. And the move up through here, it could be counted as 5 waves, but we've got an overlap with wave 4 to wave 1 here. So that's a bit of an issue. The other way we could count this as all being an A wave here, B wave here, and a C wave here. But the issue with that is that I can, on the tick chart, I can only count 3 waves down here for that. So that's a bit of a problem with that. And yeah, the other way to count this, I guess, is from this high here. It's an A wave here, a B wave here, and a C wave here. But that still just gives me 3 waves in this move here. So we'll go in and continue to look at that. So we're looking at it in both ways. So this is the bearish count here for this. So we need that low to be taken out. We can bring it up here. We can talk about this on the tick chart and so on, about this being here. This is really just going back up. I mean, that sharp drop here is just going back up and checking the supply here. So it still can fail from here. We know that Ethereum will push higher, so I don't think that, probably a good time to look at that in this junction here. I'll just bring it into the hourly chart where we've got a bit of a count on this. So we were looking at this in terms of wave 3 here and 4 here, and looking for wave 5 to move up here. It's sort of moving along in that way. I'll just go to the tick chart just so I can see a bit more detail with this. Yeah, so just let me clean this up for a moment. Yeah, so basically our game plan was here, because the last time we spoke, I think we had this high in here and we're looking at the second high. So we were looking for a breach of this to go long. So this has breached it over here for this. It looks like it's building nicely. We've got 1, 2, 3, 4, 5 here, and a correction of an A and a B and a C here for that, and then building and continuing to build up here. So we'll continue to move up. There will be problems at the old high, of course, but this is moving along nicely. So we'll end up high with all this. But the takeaway here was that this move here for Ethereum will take out the top here. That was the wave count for that. But what happens once it gets up there as well? Do you know what I mean? So if we look at this moving up here, we could probably start, let's just count this as 1 here and 2 here. It is hard to count this as wave 2 here, by the way. I'll just finish this off. 1, 2, 3, 4, and 5. It's a bit hard to count this here as wave 2 in here, if I just bring that up here, because, you know, we've got 1, 2, 3, 4, 5 here as wave 1, 2, and then 3 here, 4 here, 1, 2, 3, 4, 5. So we've really got 5 waves down here for this. So that's a bit of an issue there for that, but that's why we're looking to go long above the level. We had that nice big number, so it's sort of easier to work with. But just to point out that there's an overlap for that, so you could probably look as an A wave and a B wave and a C wave in here for that. But yeah, just saying. But anyway, this will continue to move up higher and take the tops out here for that and move up. So we'll move up into group 1 for this. So at the 100. 200 roughly and 300, then the 500 here. If support is found on top of group 1 here, which is a bit likely because we've had our correction here. We've had the arrival, the reaction, the first high above the level, and then the corrective pattern for that, which looks like this here: the arrival, the reaction, the first high above the level, the correction, and then we went long over here. That's what we're supposed to do, and that's what we did. So yeah, so that's that, and that will continue high. This is probably wave 1 and 2 here and 3 here. So this will be there'll be I'll have to count that out. Probably 1, 2, 3, 4, 5 for the third wave there. So we can put the third wave there, fourth over here, fifth up here. So probably 4, 5 or something, reaching up in this space for that. At least within this structure anyway, So the fair way to go here, before we get that sort of next top in play there. Yeah, so coming back to Bitcoin here, and we're saying that, well, okay, Ethereum's pushing up higher. It doesn't mean Bitcoin will, but it's, might be sort of stealing its light in a way. But we'll just see how it travels. Let's just go in and take a closer look at this now. So yesterday we were looking at this low here as well wave 1 here, an A and a B and a C here. I find it very difficult to get 5 waves out of this move here, so that's why I've labeled that. But I certainly understand that this is overlapping this here for that. Oh, we could go 1 and 2. Let me think about this. Oh, we could get away with it based on that high of 1 and 2 here. Either way, let's just go in a little bit further now. This is where we're up to yesterday. So we could look at this as wave B top or wave 1 top here and wave 2. So just following our conversation from yesterday into 100 ticks. We'll need a bit more data. How much? Probably don't need that much. 5. Okay, that's enough. So yeah, we can just go back over this stuff from the beginning here a little bit in this section here. So we counted down here's 1 and 2 and 1 and 2, and then 1 and 2 and 3 and 4 and 5 for the third and fourth and fifth here for the third and the fourth and the fifth. So I need to lift that up 1 degree of level to put that in there. So I should have used the next degree higher in the wave count for the labeling. It doesn't matter, but an A and a B wave pulling back to the 61.8% there, and then looking at this here. I did my best to pull it apart here. It could probably be counted a bit differently. This little section up here, a bit hard to get into. Need to get into the sort of 20 ticks or 10 ticks or something. But yeah, counting 5 waves down here. I mean, you probably could count it down as wave 1 to here, wave 2 to here, wave 3 to here, wave 4 to here, and then wave 5 down to here, which we looked at yesterday as well. A little bit odd, but possible. So that's how you'd get your 5 waves. What we're more interested in is this. We started to build in here somewhere, wasn't we? Somewhere up in here. So we were going to go short below this level, but also too, we talked about going, it's important we go back over this, because what we were looking to do was to go short under the 55 here. But the way that we were going to do that was just use the classic trading levels pattern. So we would see the market come down, have a bounce, come through here, and then push back up here. So we wanted that first low in play here as it's come through. So it's hindsight, but it's good to talk about it. So we wanted that low to come in place because that's the one we can short it at. Then we can short it below that. So It's the same thing over here. If you're going to short this again, you would wait for the low to come in, wait for the decent retest, and then look at this one, and then look at this one here to short. So these triggers never came in, but that's what we were looking for. We knew that we'd be coming down because we could count 5 waves up here. So we were looking for an A and a B and a C to come back. So that all played out quite nicely. We sort of don't need that, but it's just good to I like hindsight because you can, they're just sort of case studies really, and they work well. So you can learn. You need to have that learning loop. So what we can see today is we can see 1, 2, 3, 4, 5 up here, and then a sharp pullback, and then 1 and 2 are building up here for this. So also what we talked about yesterday, I think, was looking for support on to trade long, because from that high to this low here, not that one at this stage, but this one to this one, this was the 50-60% retracement level area. So what we were looking for was the classic trading levels pattern within group 2. So we've got 55 here. So with the levels, we've got 50 Fibonacci numbers. We've got 1, 2, 3, 5 and 8 here. So 53, 55, 58. When we talk about 8, we've got group 2, which is, I call it 65. In this case, it's the 56,500, and the 72 here, 57,200, and then the 58 here. So they all make up group 2. So the 61.8% retracement level was quite close to the lower end of group 2. So we're looking for a classic trading levels pattern to go long on here, because that would throw it out at that point. So the idea was to build in on these levels with smaller positions. The thing here is that if we now take the top, just in case we're wrong, we take the top here and the bottom here, and then this leaves us with the 61.8% here at that point. So just above the 57,200 area there. So if this is 5 waves down here, yes, it could still be bullish. It would just be that we would need to look at it as this wave 2, not that wave 2. The other point here is that the market can still fail from here, because if we consider this here being the A wave here, the B wave here, then 1 and 2 and 3 and 4 and going up for 5 here, up in this leg here, then this is where it can fail from here and move down from that point. So we're not really out of the woods yet on the long side. We could say that if we had 58,000, that's probably the 78.6 there as well. Yeah, pretty close. That's okay. I mean, it all looks nice and bullish, and we can see Ethereum pushing higher and so on. But yeah, we do need to, I mean, it's positive. It is positive to get through into group 2 here, the 65, 72 and 80. That is positive. And it's positive in step 1 and getting support here for this. So the next step is really getting support on the 72 here. So you can go long again, but this is where the risk is here. So in going long here, you'd need a classic trading levels pattern. So just simply, you're just looking for the first high above the level in that regard, and then you can move up and do the same at 58 as well. 8's a profit-taking number, so it's where you could see more of a profit-taking thing going on here. But because we've already been in that space a few times, it's not all the wind's been taken out of the sails. So we'll definitely stay within group 2 here for this. So the reaction from the 58,000, there should be one here, and it should keep us within group 2. So that's the safety. If from here on in, if this 65 here becomes the retested resistance, then we've got a problem on the downside. Well, not a problem. Then we look for the classic trading levels pattern again, and if it drops here after that retest of that, then we'll be pulled down to this number at that point. So that's where we turn bearish next. at this point. So if you're going to go short, that's where it is. So we don't need that green line. It will be at that place there. Okay, so it's all pretty simple. So look, I'm just giving you the reality of things. This can be an A wave and a B wave and a C wave here, and fail from this point and go and pull down. It's kind of a typical ABC really, because when we're looking at ABCs, if we were looking on the bullish side first, the market would come up and the A wave is normally sharp, and then the B wave, and then the C wave's on a bit more of an angle for that. And this is the same in reverse. So we come down, the markets come down, the A wave is nice and sharp, this one here, and then the B wave comes in, and then the C wave here is really coming in, you know, on much more of an angle, isn't it? You know, just trying to get the space right. So it's more of an angle compared to wave A here. So it's got the personality of a corrective pattern. It's also got, you know, the possibility of building further as well, but and it's good that it's in group 2 at the moment. That's the safety catch. But all said and done, we really want that 72 and 58 now to, you know, really make sure that that's the point. We talked about scaling in at each of these levels here, so you may have done that, and if you have done that, then this is where we'll keep the stop at this stage. We'll just keep it out of the way. We just think this out a little bit. I don't think that's the right count in here actually. It's like that's the third wave up here. So it's a bit more bullish than I thought. Okay, well that's good news for the bulls then. So that should end up sort of up there somewhere. We probably won't come into the C wave then. So that's going to take us a bit higher at that point, which is good. Okay, so I'll leave it at that, but we just need to rehash this at the moment. So if the 56,500 from this point on becomes the retested resistance, then there's a bearish case for that. Also, you need to be mindful that this wave 4 can pull back to this wave 4. So you need to allow for a little spike through that, if that's going to be the case. That means we could probably put the stop about here for that. And then just keep building in on these levels here. So I don't know where you've built in over here, but this is, I'll just drag these across here. It's pretty risky, but that's the markets to a point. So anyway, there we go. I don't think I've got any more to add to that at this stage. So I'll just leave it. I'll just leave it at that. But we'll just recap this a little bit, just so we're clear. See, I think one of the other important things here is that this group 2 here, all through here, this is where the volume turned over, you know, that's the resistance. So we're moving into that resistance. That's where the market can fail. So I really need to highlight that. This is a little bit difficult to count on. I'll just have to leave it as it is, but you know, the 61.8%, the 78.6, anywhere in here is where the market can fail at this point. So, you know, and it might be just following Ethereum up. And also remember that Ethereum's making a double top now at 4,200. So it's going to be sort of, you know, it's going to be sort of sticking there a little bit with that. But Ethereum should push through that, because double tops are never the end of the trend. So, you know, Ethereum will be up at the 4.3 and 4.5 in due course. So there is hope for this. It's just going to be a bit of a struggle moving into that supply zone there that I've put there. Alrighty, I'll just have to leave it at that, and let's just see how it moves along in the next session. Alrighty, cheers.